Hey, this is Matt with PriceActionTradingSystem.com. Today is Monday, November the 12th. This will be our price action chart lesson for Monday. It was really a range day. Today was Veterans Day, as most of you in the U.S. are probably aware at any rate. And because of that, it was really like a holiday type trading period for the most part. We had some pretty good movement, even though we spent most of the day in this range. The range was from about, I'd call the range really 73 probably up to 81.50, maybe even 82. You might call it, a 9 to 10 point range. And if, sometimes it's hard to see that when you're looking at it, but let me show you this. If I scrunch that up, then it's real obvious that's a range. You can see that pretty much, and it's almost the range from, late Friday afternoon. And really, by the time the day was over, the lows from Friday turned out to kind of be the lows, and you can see that if you stretch that on across here. Maybe a little bit higher than that, maybe right along there or so, and that's just a breakout pullback of that area, pullback retest of that area right there. But this is what I would call the range. That's pretty much it right there, and you can see that. That's pretty obvious when you scrunch it up like that. So sometimes that helps to show it to you that way. And let's go back to our regular full size here and back out a little bit, and we'll talk about the trades. And on a range day, most of you are probably aware that you generally you can fade every new high or every new low after the regular market, pretty much after the market opens, and so that made this a great short up here, and we'll talk about that when we get to it. Nice trap down here that reversed, and look at that move up. And do you know it's going to move like that? No, you don't know it was going to move. It may end up looking something like this, kind of choppy all the way down, but you have to take the trade knowing that you're probably going to get a scalp out of it and hope for the best. And if you did that right here, you rode this all the way to the top, no problems. So really, between that trade and then selling the top, which again, your runners were good, and you ride that down, you only needed 2 trades to make some pretty good money. But let's go over here, talk about all the setups that I saw that looked pretty good today, and go from there. And the first trade, we had a trap, and really what we had here, we had these lows across here, and they're fairly obvious to see. You notice there's nothing below that line, but nothing's closing down here. And even if you use those lows right there like so, you've got a double bottom, you got matching lows, and we broke 1 tick lower and failed, and then prices turned up. So really, this is the best place to go long on this trade. You really want to get in lower here, and you might have even tried to enter this with a limit order right here. But I wouldn't recommend that at that point. Notice all the overlap. Generally what happens is you break out of that overlap and you fail and you snap back, and that's what happened here. But if you didn't go long here, you definitely had another shot at it right here, and you still had room to scalp out before you got up here. And it was a nice easy scalp. It took a little while to work its way up if you entered here. Actually, by the time we got to here, I don't like this trade as much, but look how bullish looking that is. I really liked it off this low after that failed break, and that's just a failed break below all these matching lows across here. And then we went back to the upper side, and generally you probably should have had a trend line like this right here. And that's your first break of that trend line as well. So you're looking for a retest. We went up and retested it. And look at that reversal right there. I didn't like going short there because you got so much overlap. You do have a broader double top. But when you get this much overlap, you're almost always going to snap back just like that right there. And then you got another chance to go short, but it was, look at that doji right there. It's not really that great to go short below dojis. But when this one turn and it closed on its low, it's really looking pretty good then that we're probably in a range and probably going to go lower. So if you took this trade right here, generally you want to see that tick, one tick higher and trap people. But the fact that we tried to go lower twice and then tried to go higher twice, and let me show you that. We come down, we bounce once, we come down again, but we go back up. So you're trying to test this EMA twice and then it sells off. And remember, anytime the market does something twice and fails, it's probably going to succeed in going the other way. And at the very least, you should have been looking at this leg down. There it is, thinking, okay, maybe we'll get another leg like that. And you can see, and even if you count it from there, well, I would say that's your leg right there. And then it bounced and you got a couple of legs up. So it's a two-legged pull back to the EMA. Again, you got a nice little tiny doji up near the very high, so you can get short right here and have a very small stop. But you didn't need that. It was off to the races. Any runners were safe on this trade. They came back and got the runners on this particular one. But you know, if you got short right here, you know, and then you're looking for a possible two legs down, measured. There's leg one, and then there's leg two, a nice measured move down. But you had your lows down here anyway. And then look what happened down here. We got these matching lows right here. We broke below them. We reversed up. There's your long right there if you wanted to go long. This one was a little more risky at this point because I'm thinking this. Let me show you this. There's your move down. You could have seen that as a break of the trend line, but I really thought that's more of your 45-degree angle. And this is not really a pullback. This is just kind of choppiness in here. So I believe that's your trend. You got your break right here, a retest, and then it reversed. And so, and you can always try to find your channel too, and you can see that's probably your channel. But I didn't like this trade for the reason that we didn't have a trend line break yet. But now we've got it, then we come down, a retest, and that's what you'll notice on range days, that your retest won't always make a new high, it'll just make a double bottom or a double top, and that's what it did here. It made a double top. Here it made a double bottom, and then it reversed. But notice this trade right here. You got your first entry short, you pulled back, you got your second entry short, and then it tried to go short one more time, and then this reversal bar. And, you know, we traded all the way down there, and now you got this low, and you've tested it twice, and this was kind of the lows from before that we broke below. So that kind of supports that, or kind of shows you that that support there is pretty strong, and we've got one break below it, and then we couldn't get below it. 3 more tries there. Definitely 2 more tries, even if you counted those 2 bars, because if you go into a different chart, some of y'all may only have 1 bar there depending on how your bar is set up, so you may only have 2 tests of that, but that's good enough. When that reversed, this was a great setup, and I had no idea it was going to run straight up like that, but it did. But evidently a lot of people were waiting for that trap and watching for it. And this was a great trade. And again, any runners were safe here just like they were over here. So you can ride this all the way back to range day on any break higher to a new high or any stall right here. You want to exit. And so, in fact, what I did, excuse me there, is I just had an exit order sitting right here, 1 tick below these last 2 highs, and I exited right there. And so you get out within a point of the top or so, and then I'm looking to go short. And because it is a range day, you can normally fade every new high and every new low. And notice this is a new high. There's your highs from earlier, and we broke a tick higher and failed. And generally you want to wait on the second entry, but because we were away from this EMA so long, to range day, and then we got this big stem, and we closed almost on the low, I went short right there. And that's a little aggressive. It's better to wait on the second entry, which, you know, you got another try at it back up here, and then you turn down. So the second entry was really here. But let me show you, you know, sometimes being more aggressive like that is, look how quick they came back and got the runners off of this one, but you got to ride this thing down a couple more points before it pulled back and got the runners from this entry right here. And so, and a lot of times they won't come back and get the original entry, although they did right here. And this actually should have been red for some reason. I left it blue. But notice too that now you should have a trend line working back down. And you draw it off those first couple of swings. And so notice, actually I still don't have that quite right. There it is right there. And so you got this trend line working through here. That's a pullback that retests. Look at that reversal, and that's what I'm always talking about. Break one tick below that. And, you know, it's an easy scalp. Again, they come back and get the runners, but nice easy scalp. And there really wasn't a second entry here. And you've got two measured legs down, so I didn't like this entry right here. It would have worked, but notice how it snapped back again. The best entries almost always come off the trend line, or two legs back to the EMA and trend line, or just two legs back to the EMA, and we didn't get that there. So this was a nice short. Again, most of these were only good for a scalp today, but this one was good for runners. And actually this one might have been, I can't remember. Yeah, this one, if you entered here, your runners were good here, and you could have ridden this all the way down. So these two trades here were really the two best trades of the day. And this one, because actually this was probably your best trade of the day, because runners were easily safe. And this was easy to spot. And I was had a couple of people that emailed me right about this time we were talking about this. And the conversation was, how do you know if it's going to bounce? And you don't know. It's a calculated risk. So you're waiting to see if prices are going to break lower or if they're going to trap people and go higher. And you had a little bit of a trap right there. And notice that if you entered right there, as long as you kept your stop below that signal bar, and that's your signal bar, the bar that ends is a reversal after the breakout. So that's your signal bar. You go one tick above that signal bar if you want, and your stop goes below it. And as long as you kept your stop there, no problems. Now, if you scalped out and moved your stop to break even, then you didn't get a runner off that one. But even if you scalped out of this one and moved your stop to break even, your runner survived, and you get to ride that all the way up. That's a great setup. And then again, there's a first entry short, second entry short, it failed, but it got kind of hung up down here, and they tested that one more time, and that was when it couldn't go any lower. And notice too how your closes are way down here, and then now your closes are all higher, and you know you're closing, you're kind of seeing a line in the sand right there, and you kind of move that up, and then you can really see that this area is holding here as support, and off it goes. And we've already talked about those trades, and that was really it for today. But I want to show you a couple of other things. Just remember to watch for your two legs that we talked about. Remember that you can even find short-term trend lines, and there'll be one right here. And this one looked like this, in my opinion. It's right off those first couple of bars. We broke a little bit lower right here, then we tried to come back and test it, but we didn't get any higher, and then it sold off. And then you got this trend line coming down, and you got a little bit of a break right there, not much of a one, so, but this is more of a range than a real trend. This is really choppy here. But generally you can draw these trend lines and you get an idea when you want to go short or when the trend is over, and that one's pretty obvious right there, and then you get the break, and then this one's fairly obvious. You get the break and you reverse. But just remember the best entries. This is what I want to talk about. Somebody was asking me you know, about some simple entries, why I don't mark them, and I haven't talked about this lately, but the best entries are always going to be on range days at the strong resistance, which is up here, or the strong support, which is down here. So that's where your best entries are going to be. And so I don't like taking a lot of entries in the middle here, especially when it gets like this. This right here not only is a two-legged pullback to the EMA and the trend line, it's a breakout pullback short on the second entry as well. So there were a couple of different reasons to take that trade. And if you drag that line over here, you can see that that's just a pullback that retests the breakout area, two legs back. But the other place I like to enter is pullbacks to the trend line, and they're going to give you your best. This is not a trend day, but you know, even the shorter term trends, you can see that. Could you have entered in here? Yeah, but what would have happened? You would have got trapped because it's trying to pull back and test the support and the resistance areas, and the resistance area is the trend line and that breakout area. So that's what you're trying to pull back and test. So I don't like that entry right there, plus all the overlap. If you wait on the key entry points and the pullbacks and the retest, you're going to do a whole lot better than if you enter in the middle. Like here's a leg back. This one worked. You can see that. It turned down and it went down, but notice it didn't go far and it's snapping back. Those just are not good set. And this is kind of a breakout pullback because you do have these matching lows across here, kind of a double bottom. And it pulls back and tests it and then turns down. So it's still kind of a breakout pullback short. But until you come back and test that trend line, you generally don't get the really good setups. And by this time, it's too late in the day. But notice right here where the really strong move occurred, right off the trend line. Notice where on the range where the really strong move occurred, right off the support area. Notice where the really strong move came off this top, right off that top. Got choppy right in here, but it continued to work on down. Notice this move. Prices are chopping around. It pulls back. It finally touches the trend line, and look at that move out of there. So that's where all your key entry points are going to be. If it's a range, they're going to be at the highs and the lows, the strong resistance and the strong support. And if it's trending, it's going to be the pullbacks to the trend line and occasionally to the EMA if it's a really strong trend. And when you get it pulling back to both, there are multiple reasons to go short here. Let me show you all this. First, you got the breakout below this support area, so it's a breakout pullback. It's two legs back to the EMA. It's two legs back to a possible trend line. It's a breakout pullback short. You got this congestion. It's a failed break out of that congestion. Just lots of different reasons to like that trade right there to the short side. And you got to be thinking we're going to at least come down here and test these lows of the day, because that's the next logical support area is down in here. And we get down here, we test it, and we bounce out of there. So keep that stuff in mind. But again, it was kind of a quiet holiday type action, not a lot of volume, but there were still some really good moves with a chance to make some money today if you were just patient. If you're constantly looking for an entry, you get stuck in all this stuff and you get tricked in and then you get tricked out and then it ends up going right where you thought it was going to go and stuff like that. So wait on the traps. And that's another thing about this little pullback right here. Notice this overlap right here. It failed out the low, shot up, it snaps back, then it fails out the high side, but we're expecting prices to go lower because it's a range day, and so then it fails out the high side, so you can ride it down with the way we're expecting prices to go, kind of with the current trend. And I'm going to call it a day. I think that's pretty much covers everything as far as today goes. Fairly simple day, but if you just wait on these highs and lows and forget everything in the middle unless you get a really good setup, you're going to do better because you're not going to get trapped as often. This is your high probability trades on a range day, or the highs and lows, and there's, even if you just waited for these two, pretty good day. So I'm going to wrap it up. This is Matt with PriceActionTradingSystem.com, and we'll see you next time.